In just the last 6 months, BitMine has pulled off one of the most radical, head-spinning transformations I have ever seen. They've gone from a pretty straightforward crypto miner to, well, something entirely new. And it's a move that has left investors completely baffled, standing at a massive fork in the road. So here's the big question we have to tackle in this explainer. Is this company making a brilliant bet on the future of Ethereum, or is it a ticking time bomb for anyone holding the stock? The answer is not obvious, and believe me, the stakes could not be higher. Okay, let's get into it. And right here, this is the core mystery we need to solve. You've got the market saying the stock is worth about 28 bucks. Then you have Wall Street analysts, and they're even more optimistic, with an average target of over $50. But then you have a fundamental valuation model, one that looks at the company's ability to actually generate cash, and it says the stock is worth a measly 18 cents. That gap is it's colossal. It's almost unbelievable. And to figure it out, we have to go back to how this all started. Okay, to even begin to solve this puzzle, you've got to understand one thing. The BitMine you see today is not the same company it was 6 months ago. They completely reinvented themselves. They basically turned themselves into what's called a leveraged proxy. And this changes everything about what you're buying as an investor. See, a bet on BitMine isn't about their mining operations anymore. It's a straight-up, high-stakes bet on the price of one single asset, Ethereum. So how'd they pull this off? Well, they pretty much shut down their old Bitcoin mining gig and went all in on ETH. They hit the capital markets hard and bought a staggering 4.2 million Ethereum, bringing their total stash of crypto and cash to over $14 billion. Now they're making money from things like staking and consulting. And then, in a move that kind of came out of left field, they also dove into the creator economy with a $200 million investment in Beast Industries. So this huge pivot to becoming an ETH mega treasury, it has had a shocking impact on their financials. Let's dig into the numbers because this is where things get really wild. Just look at this. In the first quarter of 2026, BitMine reported a net loss of over $5.2 billion. Let me say that again, $5.2 billion. That's the kind of number that can just erase a company. But here's the thing. With BitMine, it's not what it looks like. But here's the catch, and it is a huge one. This wasn't a loss from, running the business. They didn't actually burn through $5 billion in cash. According to their own filings, this was a paper loss. It was caused entirely by the price of Ethereum dropping during that quarter. This just proves it. Their reported profits, their fate, is now completely tied to the whims of the crypto market. But, those paper losses, they come and go. There's a much more real, a much more tangible cost to this whole strategy, and it's being paid directly by the company's owners, the shareholders. See, to buy all this ETH, BitMine has been printing new shares like there's no tomorrow. Just look at this. In the middle of 2025, they had 234 million shares. By January 2026, that number almost doubled to 454 million. Every single new share they create makes your piece of the pie smaller. That's called dilution. And folks, this is happening on an absolutely massive scale. And if you think that's bad, it's not over. Not by a long shot. The company just got the green light to increase its total number of shares from 500 million to 50 times billion. That's not a typo. 50 billion. That's basically giving them a blank check to water down your investment into almost nothing. This is one of the biggest red flags I've ever seen in my career. All right, so now we've got the key pieces of the puzzle. We get the big strategy shift, and we see the crazy financials behind it. So let's go back to that $13 billion paradox and see if we can finally make it make sense. This is where the story splits in two. You've got the bull case, the hype, and it is so tempting. You have analysts pointing to insane revenue growth, the fact that they're the world's largest public holder of ETH. The argument is simple. If Ethereum goes to the moon, BitMine's stock won't just follow, it could multiply. But then you have the bear case, the hard truth hidden in the numbers, a fundamental value of 18 cents, insane paper losses, and the most destructive force of all, catastrophic shareholder dilution. So look, it all comes down to this. If you buy BitMine today, you have to be okay with two gigantic risks. First, everything depends on the price of Ethereum. ETH goes up, you win. ETH goes down, you get crushed. And second, the piece of the company you own is constantly getting smaller, thanks to a management team that can print shares whenever it wants. Okay, we've laid out all the evidence. We've weighed the hype against the cold, hard reality. It's time to solve this thing once and for all. After weighing the enormous potential upside against the crushing fundamental reality,
our recommendation, based on a rigorous analysis of the source material, is an unambiguous sell. And we are setting a 12-month target price of 18 cents per share. Now, why such a low number? Because the company's real value, its fundamental value, comes from the cash it can generate for its owners. Period. That's what a discounted cash flow model measures. The market is treating this stock like it's just a simple crypto ETF, but it's not. It's got way more baggage and way more risk. So let me boil it down one last time. The absolute best reason to own this stock is that it's a pure supercharged bet on Ethereum. But that potential upside is completely torpedoed by the single biggest risk. Any value they create is being systematically destroyed by printing new shares. It's like trying to fill a bucket that has a massive hole in the bottom. Now, I get it. A lot of you might still be bullish on crypto in general, just maybe not on BitMine after hearing all this. So what are the alternatives? Well, the source material points to a couple of other players like RIOT Platforms and Hut8. They're highlighted for having really strong revenue growth. RIOT has that more traditional Bitcoin mining business model, while Hut8 is a bit more diversified. Now, this isn't a recommendation, but they're presented as companies that could give you that crypto exposure without the same extreme risks we're seeing with BitMine. They're definitely worth your own research. So, in the end, the story of BitMine is just a wild ride, a case study of a really bold strategy that, according to the numbers, just costs shareholders way too much. That gap between the market hype and the fundamental value is just too big to ignore. So let us know in the comments, what company should we put under the microscope next? Thanks for sticking with me on this one.